Okay, so in this video, I want to give a quick market update. Um, Today it's the 31st of August 2019, Saturday, and this is just a quick market update of what's happened so far. Right now, I think there are a few pretty standout trends. The first one being the US dollar and what's happened recently. You can see that's kind of shot up quite a fair bit. It's really showing a fair amount of strength, especially in the past couple of days. Now, the way the market has been, it seems that when the trade war escalates, the US dollar comes down, and when the trade war de escalates, the US dollar goes up. So, this is potentially an indication that the trade war is de escalating. The next thing I want to talk about are bond yields. Now, you can see it's gone absolutely smashed this month, really, and it's shown a bit of um, signs of coming back recently, but this is just something to keep an eye on. It's really yields have really come down a fair bit, and that's a global phenomenon. Uh, German yields are well into the negative 71 basis points. Japanese yields negative 27 basis points. So that's really a global phenomenon. We thought we might have seen a bottoming in 2016. Not to be the case. Seeing yields coming down across the board. Uh, Same thing happening in the UK. Uh, Seems to indicate it's a pretty strong trend. Now, one last thing, the CRB, which is a commodities index divided by the US Treasury bond price, 30 years. This particular chart really shows that when this is going down, it indicates that commodity prices are coming down and bond prices are coming up, which imply that interest rates are coming down. So essentially, it's saying commodity prices are coming down and interest rates are coming down. Now, that's pretty indicative of deflation, because what that is saying is that interest rates are coming down, um, and commodity prices are coming down as well. Or at the very least, commodity prices are coming down um, relative to bond prices coming up. So at the end of the day, this is a pretty strong indicator of deflation, and it is indicating exactly that, deflation as it's coming down. One last thing I would like to highlight is the stock market. So New York advanced decline, that's fairly strong. New York high lows, that's fairly strong. Um, Value line is indicating a bit of weakness, but doesn't look like too much weakness looking at these charts so far. Market breadth, micro caps are showing a fair bit of weakness. Same with small caps. uh, S&P 500, the large caps, they're still showing a bit of strength, but we just got to keep in mind that there is a bit of divergence between small caps and large caps now, which is typically a bearish sign, or at least a risk-averse sign. Moving on to global markets, there's two that I would like to look at in particular, and that's the ASX 200 is actually showing a fair bit of strength yesterday. Now, also, if we have a quick look at the Shanghai Stock Exchange Composite Index, um, it's shown a little bit of strength, potentially bottoming out, but not as much strength as the Australian index showed. And lastly, we've got the AEX, the Netherlands index. That's shown also quite a fair bit of strength. So this is potentially an indication of risk on in the markets. At the end of the day, the narrative really is still the trade war, um, but potentially we are seeing maybe too much risk averseness in the markets, or too much risk off behavior, and there might be a reversal, at least in the short term. So that's just something I need to take into account when I do my portfolio review. But thank you for listening. That has been the market update.